Imagine investing your hard-earned money into a company, only to watch it collapse months later. Warren Buffett has avoided disasters like Enron, Lehman Brothers, and WorldCom because he knows how to spot red flags in financial statements, signs that trouble is brewing beneath the surface. Today, I'll reveal the exact warning signs Buffett looks for, strategies taken directly from the Warren Buffett and the interpretation of financial statements by Mary Buffett and David Clark, so you can protect your investments before it's too late. But first, smash that like button and subscribe if you want more book summaries like this. Buffett says, the stock market is like a voting machine in the short term, but a weighing machine in the long term. The weight of a company's future is hidden inside its numbers, and if you know where to look, you can see the cracks before everyone else. The first red flag: declining gross margins over time. Gross margin tells you how much profit a company makes after covering its direct production costs. If it's shrinking year after year, it means one thing: the company's competitive edge is slipping. Let's understand through example stories. Take BlackBerry in the late 2000s. Once the king of smartphones, its margins began to shrink as Apple and Android phones took over. That was a silent alarm for anyone watching the numbers. They were losing pricing power. In India, Jet Airways saw its gross margins shrink for years before shutting operations in 2019. Rising fuel costs, fare wars with low-cost carriers, and poor pricing control slowly eroded its profitability. The falling margins were a clear warning long before the final crash. Action tip: check the last 5 to 10 years of gross margins. If they're steadily dropping, ask yourself, is this temporary, or is the business losing its moat? The second red flag: accounts receivable growing faster than sales. This means the company is selling products, but not collecting the cash quickly. In plain English, customers might not be paying on time, or worse, not at all. An American company, before Enron's collapse, their receivables ballooned far faster than revenue. It was a hidden clue that much of their so-called income was just numbers on paper, not real cash. Take another example, an Indian company. Before the collapse of Satyam Computers in 2009, receivables shot up disproportionately compared to revenue. It was a signal that the reported income wasn't translating into cash. Action tip: in the balance sheet, compare receivables growth to sales growth. If receivables grow 20% but sales grow only 5%, that's a red flag. The third red flag: inventory piling up faster than sales. This could mean the company misjudged demand, has poor inventory management, or its products are simply not selling. In 2012, electronics retailer Circuit City had warehouses full of TVs and gadgets, but sales were flat. The numbers screamed trouble, and within months, they went bankrupt. In 2019, PC Jeweler saw inventory balloon far faster than sales growth. For a jewelry retailer, excess inventory ties up massive capital, and it hinted at slowing demand, something the market realized only later. Action tip: look at inventory levels in the balance sheet compared to sales growth in the income statement. A widening gap is a danger signal. These aren't just accounting details, they're early warning signs. Buffett often says, you only find out who's swimming naked when the tide goes out. Many investors ignored these red flags before Enron, Lehman, or Blockbuster collapsed and paid the price. Lehman Brothers' balance sheet before 2008 showed rising leverage and questionable asset quality. The data was there for anyone who cared to look. Here is your Buffett-style red flag checklist. 1. Track gross margins, steady or falling. 2. Watch receivables growth. Is it faster than sales? 3. Check inventory trends. Are they rising without demand? Avoiding bad companies is just as important as finding good ones. Warren Buffett mastered both, and so can you. If you found this helpful, hit like, subscribe. Thanks for watching. This is Guide to Wealth, where powerful ideas meet practical action.